right. Good morning, everyone. This is the appeal of St. Tomas Market, Inc. This hearing will be live streamed on OTA's YouTube channel, and I will ask OTA to start the live stream now. This is the Office of Tax Appeals hearing for the appeal of St. Tomas Market, Inc. I'm going to explain a few logistics about how this electronic hearing will work. And after that, we will officially go on the record. And then once we are on the record, I will ask the participants to identify themselves. If at any time anyone has difficulty hearing someone or is having technical problems with the video conferencing, please speak up and let us know. To reduce background noise, we suggest muting yourself when you are not speaking, like when you are listening to another party's presentation. But please remember to unmute yourself when it is your turn to speak. There should be an icon of a microphone at the bottom of your screen for audio, and that is how you can mute and unmute yourself. Also, please silence your phones if you have not already done so that we won't be interrupted by a phone ringing. Please remember that today's proceedings will be live streamed to the public on OTA's YouTube channel, so any information is publicly viewable. Therefore, please be careful not to share any confidential documents on your screen or share any confidential information, such as home addresses or social security numbers. Also today, we have our stenographer, Ms. Alonzo, who is reporting this hearing verbatim. To ensure that we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. And please speak up clearly and loudly so that what you are saying gets is easily understandable. When needed, Ms. Alonzo is free to stop the hearing process and ask for clarification. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. Now, if everyone is ready, and Ms. Alonzo, if you are ready, we will go on the record. Thank you. We are on the record for the appeal of St. Tomas Market, Inc. This is OTA case number 23-111-4755. Today is Wednesday, May 21st, 2005, and it is approximately 10:58 a.m. We are holding this hearing electronically over Zoom with the agreement of all parties. First, I will start by asking each of the participants to please state their names for the record, and I will start by asking CDTFA's representatives to identify themselves.
This is Naran Samarvikram, a hearing representative for CDTFA.
This is Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
And Jarrett Noble, Attorney 4, also with CDTFA.
Thank you. And now I will ask appellant's representative to please identify himself for the record.
Paul Azir for St. Thomas Market, doing business as Ramona Market. Thank you.
Thank you, everyone. I am Suzanne Brown. I am the lead administrative law judge, or ALJ, for this case. My co-panelists today are Judge Stephen Kim and Judge Andrew Wong. Although I am the lead ALJ for purposes of conducting the hearing, all three ALJs are co-equal decision makers in this process, and they are free to ask questions or otherwise speak up at any time. This hearing is before the Office of Tax Appeals, or OTA. OTA is not a court, but is an independent appeals body. OTA is staffed by tax experts and is independent from the state's tax agencies, including CDTFA. Because OTA is a separate agency from CDTFA, arguments and evidence that were previously presented to CDTFA are not necessarily part of the record before OTA unless those documents have been submitted to us. OTA's written opinion for this appeal will be based upon the briefs the parties have submitted to OTA, the exhibits that will be admitted into evidence, and the arguments presented at the hearing today. As a reminder, this panel does not engage in what's called ex parte communications, meaning that the panel members do not speak to one party without the other party present. I'll just recap that we had a pre-hearing conference back in April regarding this case, and I issued a document called the Pre-Hearing Conference Minutes and Orders dated April 15th, 2025. And as we discussed at the pre-hearing conference and was confirmed in my minutes and orders, there are two issues for hearing today. The first one is whether further adjustments to the amount of unreported taxable sales are warranted. And the second issue is whether the negligence penalty was properly imposed. First, I'll ask appellant's representative, Mr. Azir, would you say that's a correct statement of the issues today?
Yes, Honor.
Okay, thank you. And CDTFA, do you agree that's an accurate statement
Yes.
of the issues?
Yes, Judge. Sorry. Yeah.
That's okay. Thank you. Thank you, everyone. Next, I want to talk about the exhibits. I did receive exhibits from CDTFA that were timely submitted, and we discussed these at the pre-hearing conference. CDTFA has marked these as exhibits A through J. I will just confirm, appellant, Mr. Azir, or appellant representative, appellant has no objection to admission of these exhibits into evidence. Is that correct?
No objection, but probably I need one clarifications from California Department of Tax and Fees in exhibit number I.
Okay, what is your question about exhibit I?
Oh, okay. That's the same credit card sales for 2021. And is that include the non-taxables sales?
CDTFA, do you want to respond?
It is the total credit card sales.
Judge Brown, I can add a little bit of clarification in the,
Sure.
no, we're not in argument yet, but in
Right.
in the audit, we estimated year 2021 credit card sales from the 1099K forms. The Schedule I shows the actual 1099K information for 2021 since we've received it after the audit was completed. That's the only information that's in there.
And I understand that CDTFA also addressed that in its brief submitted, and I believe it's Exhibit J.
That's correct.
Okay. All right. Appellant, as I was saying, do you have any objection to these documents being admitted into evidence?
No, I don't have any objection, but as I like to have it for the record, like what the CTFA said, that's include the taxable and non-taxable. So I like the court to know that's include both.
All right,
But
I will say, why don't you address that during your argument?
Thank you.
Okay, thank you. All right, so CDTFA's exhibits A through J are admitted into evidence. Now, Mr. Azir, we did not receive any exhibits from appellant, correct?
Yes, except the one we send it to CTTFA, the ledger. We didn't send it to the court. I'm sorry. Maybe I have to send it to the court, but I thought I sent it to California Department of Tax and Fees when we have the audit, which is
yes. Yes, I believe that that is incorporated in CDTFA's Exhibit D.
Okay.
If you want to look at Exhibit D to make sure that's the document you are referring to.
Sure. Okay, Exhibit D. Exhibit D. It's Exhibit D is page 253. Excuse me.
The numbers may not line up exactly with the, oh yeah, okay, it is 253. It's 256 in the PDF, but it's bait stamped as 253.
Yes, owner.
Okay.
Thank you.
All right. So I will note that, as I said, we did not receive any, OTA did not receive any exhibits from appellant, but I understand that appellant submitted the document that is now Exhibit D. I'll just remind you, Mr. Azir, you're free to refer to any of the documents that have been admitted into evidence, even if they came from CDTFA. Okay. Thank you. I've admitted the exhibits. Neither party indicated they were going to be calling any witnesses, so we will just be hearing arguments today. And as we discussed at the pre-hearing conference, appellant estimated it will take approximately 25 minutes to make its presentation. And then CDTFA will have approximately 30 minutes to make its presentation. There may be questions from any of the panel members along the way or after the presentations. And then we will allow appellant an extra 5 minutes at the end to make a rebuttal. If anyone needs a break at any point, please speak up and say so. And I'll just confirm first with appellant, Mr. Azir, is that accurate that you think your presentation will take about 25 minutes?
Yes. Yes.
Okay. And CDTFA, I'll just confirm you think your presentation will take about 30 minutes?
Yes, Judge.
Okay, thank you. All right, does anyone have anything else to raise before we begin with the presentations? If not, then I will say we can proceed with appellant's presentation. Mr. Azir, you can go ahead whenever you're ready. As I said, you have 25 minutes.
Hello, everyone. Let me start with the nature of this business. The name is St. Thomas Inc., doing business as Ramona Market. As we have the name Ramona Market, is a taxpayer operates a small neighborhood market offering food, including fresh fruit, vegetables, water, milk, meat, pork, chicken, eggs, dairy, bread, and etc. So much other items, food. And they sell some taxable sales tax. So under California sales tax law, most grocery type food items are non-taxable, which is only may be taxable if it's prepared food and beverage. But like fresh fruit, vegetables, water, milk, etc., it's not supposed to collect any sales tax. So that's the nature of this particular business. And this kind of business, that's why I like to focus, it's kind of unique business. It's not like a convenience store. It's not like liquor store. Because if we compare this one to liquor store, we not going to be accurate. It's not going to be apple to apple here. So as we said, under California tax law, is the grocery type food are not taxable because that's like supermarket. It's a small, tiny supermarket for neighborhood. So the CDTFA audit rely heavily on percentage based on projection delivery from credit card sales, which is, we just mentioned it, Exhibit I, which is include in Exhibit I taxable and non-taxable, plus include the sales tax. So an example, if one customer went to the store and he or she bought fruit, vegetables, water, food, chicken, milk, and buy a candy bar. And then they pay will include the non-taxable, all the vegetable, fruit, water, milk, and the candy bar will be taxable under California law. And then they said the candy bar is $1. So they collect $1 and say the sales tax is an example 9%. They collect 9 cents for candy bar. So the credit card calculate all of above: taxable, non-taxable, and sales tax. And that's why I mentioned it again in Exhibit I. That's the total. And this one, as a small business and a small taxpayer, and probably English is not first language for him, he prepared a sales ledgers. And as we see it in Exhibit number D, a copy of the ledger's book. And the ledger books he did as he accurate, and he believes that's very accurate and complete. If we look at Exhibit D, page 253, for 1 minute here, if the court allowed me, you will find this one is complete. They have the date, and he has taxable and non-taxable. And the date, you find it there. And he added up, which is accurate according to the taxpayer. And this method used to make it complete for calculate the sales tax for California Department Tax and Fees. And then we going for California Department Tax and Fees Regulation 1698. Taxpayers are required to maintain accurate record for gross receipt and taxable sales. And in this case, the taxpayer has done so by presenting ledgers and complete ledgers for sales. It's a common method for small business like this niches. Using electronic or point of sale system, it can be pricey for this business. And I like to explain to the court, most of the time, he's one person in this store. It's very small store. It's not big, it's not large, and it's relatively small. And I see when the auditor did this one, they said they didn't present the books, but they did present all the bank statement. They did present all the sales ledgers, and they compiled with CDTFA regulation 1698. And then the auditor said, because he disagreed with this ledgers, he went to use the credit card method, which we mention it's Exhibit D. And as California Department Tax and Fees, all the parties agreed and confirmed that include all the gross receipt, include taxable and non-taxable, and the sales tax there. So we, like the court, force the sales ledgers, since it's complete, and California Department Tax and Fees, they don't find any other evidence, can rely on except the credit card record, which doesn't present accurate method to separate the taxable to non-taxable and the sales tax. So this method, the taxpayer totally disagree to use it. And he is kind of disappointed why California Department of Tax and Fees refuse it. And they didn't provide any reason except they said they don't accept it. Plus, they said, we going to force the percentage of this one. And each audit needs to be individually evaluated. And since this business is, the name is called Ramona Market, and the fact is they sell all the other product, as I mentioned it at the beginning, we can't accept the percentage of credit card because it's not accurate. It doesn't have details, and California Department and Tax and Fees, they should use Exhibit I for the ledgers and which showing what's taxable and non-taxable, not just come with percentage, because it's very rare to find a small market available for neighborhood at this time. So respectfully, we request the court recalculate everything based on the ledgers and accurate record. And this sales ledgers, according to the taxpayer, is accurate 100% and matching with the number he reported in the sales tax return, which is monthly depositor, quarterly filing. And disregard California Department Tax and Fees using the credit card because it's not accurate, and leave the accurate record for ledgers. That's to cover the part number 1 for this appeal. Part number 2, which is the penalty California Department of Tax and Fees posted on the taxpayer. As we see from Exhibit I, the taxpayer has made a good faith effort to maintain accurate record and compile with California complex sales tax rules and California estimated. And this one showing good faith. And we ask the court to waive that penalties and use the accurate record for general ledgers. And not because it's handwritten, it's not accurate. Nothing said its handwriting is not accurate and electronic or point of sales accurate. That's not accurate statement at all. Handwriting stuff, probably it's time consuming method, but that doesn't mean not accurate. It means in the taxpayer opinion, it's accurate 100%. And that's why he keep the record. That's why he recorded in a daily basis. That's why he recorded between taxable and non-taxable for this documents. And we ask the Office of Tax Appeal to recognize these facts and issues and relieve the penalties and extra tax force for underreporting. Thank you, Owner.
Thank you very much, Mr. Azir. At this time, I'm going to ask my co-panelists whether they have any questions for appellant right now, or whether they wish to hold their questions until after we hear both presentations. First, I will, hold on a second. I just got a message that we need to pause because our stenographer lost her internet connection. So I'm going to say, if everyone can just wait a moment, we're we will wait for her to rejoin the hearing. Okay, we're going to take a 5-minute break while we wait for our stenographer. So OTA is going to put everyone back in the waiting room of Zoom, and then we'll bring you back in as soon as our stenographer, in 5 minutes, once our stenographer is back with us. So we're taking a 5-minute break. It's 11:20. See you at 11:25 or so. Thank you.
Hi, everybody. I'm tethered to my iPhone, so hopefully that sticks. If it doesn't, then I can transcribe from the video.
Excellent. Thank you, Lynn.
If he can have him go back a couple of sentences, if that's okay when he comes back.
Yes.
Thank you.
Do you, can you tell us what the last thing you had was? Negligence penalty?
Um, verbatim, and they disregarded California Department of Tax and Fee using the credit card because it's not accurate and leaves the accurate record for the ledgers.
All right, I will ask you to repeat that when we have everyone back in.
Or we can just go back to respectively, we request the court to recalculate everything based on the ledgers.
Okay.
That was the last full sentence I actually have.
Okay.
Thank you.
Thank you. I'm just waiting for the parties to be readmitted.
Also, is it okay if I take my jacket off without
Yes.
air on? It's quite warm in here.
Yes, that's fine.
Thank you.
All right, thank you. If we have everyone back, I believe we do. Thank you for your patience, everyone. We are resuming the hearing. And we had a short break because our stenographer lost power, but she is back with us now. And she requested that the very last part of appellant's presentation be repeated for her. Ms. Alonso, can you repeat back the last sentence that you had transcribed?
The last sentence I have is, so respectively, we request the court recalculate everything based on the ledgers and accurate record. And the sales ledgers, according to the taxpayer, is accurate 100%. And then I cut off from there.
Mr. Azir, I think the last part that the stenographer missed was your statement about the negligence penalty.
That's correct, yes. And we ask the court waive the penalty according to the code 1698, yes.
And Mr. Azir, in my notes, I have that you said that Exhibit I shows that appellant made a good faith effort to maintain accurate records, and that just because the ledger is handwritten doesn't mean it's accurate, that it is time consuming, but accurate. Is that a correct summary of the last part of what you said?
Yes, Honor.
Okay, thank you. And then I believe that concludes the first part of your presentation. And as I was going to say that I was going to ask if my co-panelists have any questions for appellant before we move on to hear CDTFA's presentation. Judge Kim, do you have any questions right now?
Yeah, I just had one question for Mr. Azir. What kind of POS system did appellant use to record their sales?
They don't have point of sale system.
They don't have one. So how did they determine how much the tax was and which items were taxable for their sales?
They have register tape.
They have a register.
Register tape, yes. There is a
Okay.
small register and there is a store.
And all the items, were they programmed into the register?
Yes, yes. And the end of the day, he writes down the total sales and total non-taxable and total non-taxable from that register and calculate the tax based on this.
And did he have any Z tapes from those registers?
I do have a Z tapes he provided to me. I'm not sure including in this period or not, but that's a summary for the Z tape that
Yes.
the sales ledgers.
So other than the handwritten document, you don't have the actual source documents?
I do have, I don't know for this period or not, but he did provide me the sales and sums of the day, each day of the what do you call it, the Z tape, the total by the end of the day, and I have some, yes.
Okay, but none of those were submitted for the audit or provided to OTA?
No, none of them submitted to the audit because I believe at this time the auditor refused the sales ledgers, and they like to use the percentage of credit card based on the credit card.
But you're saying you do have some Z tapes and other source documents?
I do have some of them in my office here. But again, I'm saying I didn't have a chance to look at for which period we have, but I do have, yes. I have Z tape and I have register tape comes from his register.
And that would be for part of the liability period?
I don't know, I didn't check. I can ask the client.
Okay, thank you.
Thanks.
All right. Thank you, Judge Kim. Now I will ask Judge Wong if you have any questions for appellant at this time.
Thank you. I just had one question. Mr. Azir, you were representing the appellant during the audit, is that correct?
That's correct. I presented him during the audit, but the California Department of Tax and Fees, they just open another audit, so I am presenting him for the coming audit too.
Okay. I know you're not under oath or testifying, but I just wanted to ask, do you recall signing a waiver of the statute of limitations? There in the record, there indicates that there was a waiver provided at the end of December 2021, I guess. Do you recall signing one or not?
I no recall.
Okay.
I present this client, another client, and for different periods, and it's really, I can't say yes, I can't say no.
Okay, sure. Thank you. That's all the questions I had.
Thank you, Honor.
All right, thank you. I'm going to move on at this point to hear CGTFA's presentation, but Mr. Azir, we may have more questions for you after that. CDTFA, if you are ready, you can go ahead with your presentation and you have 30 minutes.
Thank you, Judge. Pelland is a California corporation that operates a supermarket in San Jacinto, California, selling Mexican-style hot prepared food, beer, wine, carbonated beverages, tobacco products, miscellaneous taxable items, and non-taxable grocery items. Pelland is a California lottery retailer and also offers MoneyGram and check cashing services. The department audited Pelland's business for the period of October 1st, 2018 through September 30th, 2021. Pelland was previously audited for the period January 1st, 2015 through March 31st, 2018. And the audit working papers for the prior audit is shown on Exhibit H. During the audit period, Pelland reported around $1 million as total sales and claimed non-taxable food sale of around $468,000 and claimed deduction of around $40,000 for sales tax reimbursement included in the reported total sales, resulting in reported taxable sale of around $501,000. And this is shown on Exhibit B, pages 101 and 102. During our presentation, we will explain why the department rejected Pellen's reported taxable sales, why the department used an indirect audit approach, how the department determined Pellen's unreported taxable sales for the audit period, and why the department recommended a negligence penalty for this Pellant. During the audit, Pellant explained that they use daily cash register Z-tapes to prepare handwritten sales journals, which were forwarded to an outside tax preparer to prepare the sales and use tax returns for the audit period. Pellant provided their handwritten sales journals for the period January 2019 to September 2021. And these sales journals are on Exhibit D. But during the audit, Pellant failed to provide their completed sales records, such as cash register details, credit card sales receipts, to verify the accuracy of the amounts reflected on these sales journals. In addition, Pellant failed to provide complete purchase invoices and purchase journals for the audit period. Due to the lack of reliable records, the department did not accept Pellant's reported taxable sales. The department also determined that Pellant's record was such that taxable sales could not be verified by a direct audit approach. Therefore, the department used an indirect audit approach to determine Pellant's taxable sales. The department completed 4 verification methods to understand Pellant's reporting patterns and verify the accuracy of reported taxable sales. First, the department analyzed reported taxable sales for the filing periods October 2018 through September 2021. And this is shown on Exhibit A, pages 76 and 77. The department compared the reported taxable sales with total sales and calculated an overall taxable sales percentage of around 52%, ranging from as low as 42% to as high as 60% for the same period. And these calculations are shown on Exhibit A, page 76. The department also noted low reported average daily taxable sale of $567, ranging from as low as $316 to as high as $613 for the audit period. And these calculations are shown on Exhibit A, page 76. In contrast, based on the analysis of audited taxable sales for the audit period, the calculated audited daily taxable sales were $922, which the department determined to be a more reasonable daily taxable sales than the reported daily taxable sales. And these calculations are shown on Exhibit A, page 77. Second, the department reviewed Pellant's federal income tax return for years 2019 and 2020. And this information is shown on Exhibit C and Exhibit B, page 128. The department reconciled sales reflected on the Pelham's federal income tax return with total sales reported on sales and use tax returns and calculated an overall difference of around $3 million for the same period. And these differences are shown on Exhibit B, page 128. Pelham claims that these differences include check cashing amounts and MoneyGram transfers. However, Pelham did not provide any verifiable documents or evidence to support this. The department also noted Pelham did not provide their purchase amounts for these 2 years to calculate Pelham's reported markups. And this is shown on Exhibit B, page 128, and Exhibit C. Based on the prior audit working papers, it appears Pelham changed their methods of reporting their purchases on their federal income tax returns. And this is shown on Exhibit B, page 128, and Exhibit H, page 402. Third, Pelham did not provide their credit card sales for the audit period. Therefore, the department obtained Pelham's credit card sales for the audit period from the department's internal sources. And this information is shown on Exhibit A, pages 73 through 75, and Exhibit B, page 112. The department compared the credit card sales to the reported total sales and calculated an overall quarterly credit card sales ratio of around 92%, ranging from as low as 53% to as high as 125% for the audit period. And these calculations are shown on Exhibit A, page 78. This is an indication that not all of Pelham's cash and credit card sales transactions had been reported in their sales and use tax return for the audit period. Pelham was unable to explain the reason for low reported taxable sales percentages, low reported average daily taxable sales, and high reported credit card sales percentages. Therefore, the department concluded that further investigation was warranted. The department decided to use an indirect audit approach to determine Pelham's taxable sales for the audit period. However, Pelham failed to provide complete sales and purchase information to determine Pelham's credit card sales percentages, non-taxable sales percentages, and markups. Pelham also failed to provide its credit card sales and purchase information for the audit period. Therefore, the department used the best available information to determine audited taxable sales. So, the department reviewed the prior audit and contacted Pelham's known beer and soda vendors to obtain purchases for the audit period. And this information is shown on Exhibit B, pages 117 through 125. Based on the prior audit purchase segregation, the department determined the beer and soda purchase percentage of around 70%. And this calculation is shown on Exhibit B, pages 126 and 127. The department used the available vendor purchase information and prior audit purchase segregation information to determine the audited taxable purchases of around $531,000 for the audit period. And these calculations are shown on Exhibit B, page 116. The department also compared reported taxable sale of around $501,000 with the audited taxable purchases of around $531,000 and calculated an overall negative reported book markup of little less than 6%. And this calculation is on Exhibit A, page 79. If the department were to accept this reported negative book markup, that would mean Phelan was losing money every time it made a taxable sales. Accordingly, the department did not accept Phelan's reported taxable sales for the audit period. Phelan did not provide sales and purchase information to understand Phelan's pricing policies. Therefore, the department used the audited taxable purchases of around $531,000 and prior audit post markup of around 59% to determine the audited taxable sale of around $846,000 for the audit period. And this calculation is shown on Exhibit B, page 114. Audited taxable sales were compared with reported taxable sale of around $501,000 to determine unreported taxable sale of around $345,000 for the audit period. And these calculations are on Exhibit B, pages 113 and 114. To verify the reasonableness of audited taxable sales based on cost plus markup audit approach, the department calculated the overall taxable credit card sales percentages of around 178%, ranging from as low as 118% to as high as 275% for the audit period. And these calculations are shown on Exhibit B, page 42. The department also calculated overall post-audited taxable credit card sales percentage of around 71% using prior audit information for the period January 2016 through March 2018. And these calculations are shown on Exhibit B, page 110. The department noted that the calculated taxable credit card sales for the current audit period was substantially higher than for the prior audit taxable credit card sales percentage of around 71%. And these calculations are shown on Exhibit A, page 42. Based on these taxable credit card sales percentages, the department determined that it is required to use the taxable credit card sales approach to determine accurate taxable sales for this Phelan for this audit period. Therefore, the department analyzed prior audit information and determined audited taxable credit card sales percentages for periods prior to COVID-19 pandemic and periods during and after COVID-19 pandemic. And these percentages are shown on Exhibit B, page 110. Phelan did not provide any evidence to suggest that they have a different taxable credit card sales percentage for the audit period. During the audit fieldwork, Pellant failed to provide credit card merchant statements or credit card sales information to calculate their credit card sales for the audit period. Therefore, the department obtained Pellant's credit card sales information for the period October 2018 through December 2020 from his internal sources. And this is on Exhibit B, page 112. At the time of the audit fieldwork, the department did not have the credit card sales information for the period January 2021 through September 2021. Therefore, the department used the 2020 average credit card sales to determine credit card sales for the period January 2021 through September 2021. And these calculations are shown on Exhibit A, page 42. Then the department used the total credit card sale, audited taxable credit card sales percentages, and unreported taxable sales based on the cost plus markup method to determine additional taxable sale of around $165,000 for the audit period. And this is shown on Exhibit A, page 42. In total, the department determined unreported taxable sale of around $510,000. And this is shown on Exhibit A, page 41. Unreported taxable sales were compared with a reported taxable sale of around $501,000 to calculate the error rate of around 102% for the audit period. As mentioned earlier, the department determined the unreported taxable sales for the period January 2021 through September 2021 using average credit card sales using year 2020 credit card sales because Pellant's credit card sales information for this period was not available when the audit was conducted. The department now has acquired the credit card sales for this period and analyzed this new information. And this credit card sales information is on Exhibit A, pages 73 through 75. The department concluded that including actual credit card sales in its analysis would increase the unreported taxable sales by around $39,000 from $510,000 to $549,000 for the audit period. And these calculations are on Exhibit A, page 72. However, the department is not asserting an increase based on Pellant's actual credit card sales information for this period. Therefore, the department determined that the estimated amount assessed in this audit for this period is not only reasonable, but also benefit the Pellant. When the department is not satisfied with the accuracy of the sales and use tax returns filed, it may rely upon any facts contained in the return or upon any information that comes into the department's possession to determine if any tax liability exists. Taxpayer shall maintain and make available for examination on request by the department all records necessary to determine the correct tax liability under the sales and use tax laws, and all records necessary for the proper completion of the sales and use tax returns. When a taxpayer challenges a notice of determination, the department has the burden to explain the basis for that deficiency. When the department's explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department's asserted deficiency is not valid. Since Phelan failed to provide necessary records, the department used the best available information to determine the unreported taxable sales for the audit period. The audit calculation of unreported taxable sales based on the best available information was reasonable. Phelan disagrees with the audit findings. As support, Phelan provided their handwritten sales record for the period January 1st, 2019 through September 30th, 2021. And these sales records are on Exhibit A, pages 44 through 70, and Exhibit D. The department analyzed Phelan's arguments and ultimately rejected it. Upon examination of those sales records, the department noted that the Phelan did not provide any source documents or any other information to corroborate the figures listed on those sales records. Nevertheless, the department analyzed these sales records and noted that the total sales recorded on these sales records of around $5.8 million are more than the total sales reported on these sales and use tax returns of around $937,000 by around $4.9 million for the period January 2019 through September 2021. And these calculations are shown on Exhibit A, page 44. Furthermore, a comparison of the taxable recorded in the sales record of around $487,000 to the audited taxable purchases of around $497,000 resulted in a negative taxable book markup of around 2%. And this calculation is shown on Exhibit A, page 44. Phelan also disputed the audited markup percentage, taxable credit card percentage, and the credit card sales used in the audit. Phelan has not provided any documents of original entry such as cash register Z-tapes, credit card sales receipts, purchase invoices for any part of the audit period to support their contentions or to disprove the department's calculation of audited taxable sales for this audit period. The audit calculation of unreported taxable sales was based on the best available information. The department continues to find it reasonable. Finally, the department imposed a negligence penalty based upon its determination that Phelan's books and records were incomplete and inadequate for sales and use tax purposes, and because Phelan failed to accurately report their taxable sales. Specifically, the department noted that Phelan failed to provide complete record for the audit period, and Phelan failed to provide documents of original entry to support their reported taxable sales. Phelan's failure to provide complete books and records for the audit period is evidence of negligence. In addition, the audit examination disclosed underreported taxable sale of around $510,000, which, when compared with the reported taxable sale of around $501,000 for the audit period, resulted in an error rate of around 102%. This high error rate is additional evidence of negligence. Last, Phelan was previously audited for the period January 2015 through March 2018 which also resulted in a determination of unreported taxable sales. This indicates that Phelan had the experience and knowledge to sufficiently understand their sales and use tax compliance obligations. In conclusion, since Phelan did not provide complete books and records, the department was unable to verify the accuracy of reported taxable sales using a direct audit method. Therefore, an alternative audit method was used to determine unreported taxable sales. Accordingly, the department determined the unreported taxable sales based upon the best available information. The evidence shows that the audit produced reasonable results. Phelan has not provided any reasonable documentation or evidence to support an adjustment to the audit finding. Therefore, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you. Now I will turn to my co-panelists and ask if they have any questions for CDTFA. Judge Kim, why don't you go first if you have any questions?
I don't have any questions at this time. Thank you.
Okay, thank you. And Judge Wong, do you have any questions for CDTFA at this time?
I did have a couple questions. For Exhibit B, page 110, you had referenced that in the exhibits, it's how the credit card sales ratio was calculated. And I see mechanically how it was done in the math, and it resulted in 102.84% taxable credit card sales ratio that was applied to like the latter half of the liability period, I believe beginning with second quarter 2020. How is it possible for there to be a credit card sales ratio above 100%? Because that means the credit card sales exceeded total sales. And does it make a difference, I guess, based on the credit card data that was acquired later? Oh, Mr. Samara Wikrama, you're muted.
Sorry. Judge, we use the taxable sales and compare to the credit card ratio. So if you go page 110, give me 1 minute. So based on the prior audit from January 2016 through March 2018, the ratio is 71%. Then we gave an adjustment for the COVID, like a 20% adjustment. And when you calculate the first quarter 2020, so the COVID happens in March. So what we did, we weighted 71% and 102% and came up to 81% for that particular quarter, first quarter 2020. So we have three ratios. Reason the first 2 months of first quarter 2020 we use a 70%. That is for 2 months, and 102% for the third month, and we took those total and divided by 3 and came up to 81%, 81.46 in page 110. So the reason we have more is because we compare we didn't compare the credit card sales to the total sales. We compare the credit card sales to the taxable sales based on the prior audit.
Can I add one
Did I-
thing?
Yeah.
This is Jason Parker. I did want to just mention that with credit card sales, the 1099-K information includes any tax or tips. If there's a, like restaurants typically have tips, this place probably did not have tips. So the credit card ratio could be above 100%, but there is still cash sales included in that. So for instance, the 1099-K for fourth quarter of 20 was a little over 92,000, and the taxable sales that we ended up with the 102% was 89,000. So it's less of the sales.
Okay. Thank you. Oh, and also, my final question was about the waiver that I had asked Mr. Azir about earlier. I didn't see a copy of that in the record. Mr. Azir seems to be waving his arms, but does CDTFA have a copy of that somewhere available? I know there's references to it in the decision. There's references to it in the log of audit activity. I just didn't see the actual.
Yeah, Exhibit A, page 28, Judge.
Okay, thank you. Perfect, great. Thank you very much. That's all the questions I had.
All right, thank you, co-panelists. At this time, I will say that we will proceed to hear appellant's rebuttal. Mr. Azir, if you're ready, you can respond to any of the presentations or questions or anything thus far. You have 5 minutes.
Thank you, Honor. I have here, since the last audit, the taxpayer start to use the register tape and report the daily sales as mentioned in Exhibit D. I'm sorry, Exhibit J. Let me refer. Yes, I'm sorry, Exhibit, the daily register, Exhibit D. And in Exhibit C, what is the income tax return, you will find in page 149 and page 202, the taxpayers doing cash for cashing cash checks, and he does money order. And as CTDFA agree, it's a supermarket. So impossible as a supermarket you use 100% or higher than 100% of the credit card for non-taxable, for taxable only, which is absolutely, it's not clear at all. How come this the credit card method is higher than it's more than 100%, and even the court, the owner just mentioned it to him, and I agree. This one, it doesn't make any sense when they saying the credit card ratio is over 100% and ignoring and contradicting themselves. It's a supermarket. So how come supermarket and collect credit card more than 100% of the credit card or more is taxable? So where is the sales of bread, food, milk, anything non-taxable? And it's a supermarket, and the name it's explain it. And even the California Department of Tax and Fees fail to provide which one they comparing to. They make that markup method very high like this. This one is not a convenience store, it's a supermarket. So if they have any other supermarket, they can provide it for the same ratio, will be reasonable, but they don't provide any reasonable method we can rely on. And that's a very unclear method. They did use it. And they refused to use the sales daily ledgers and take it from the register tape. And not even that, they provide all the bank statement, and it's very clear in the bank statement it sells food and MoneyGram, and they have MoneyGram including in this, which is absolutely wrong to have it in gross sales, because MoneyGram has separate bank account for it, and they have a separate bank account for lottery too. But California Department of Tax and Fees, they have this one in the calculation and including there, and which is not supposed to be. It's very clear, and it has been provided by all evidence. It comes from MoneyGram, and it comes from lottery, and it comes from cashed checks, which is that's all the sales he mentioned it, which is saying is about 9 million, which is impossible for this place to sell that much. And again, back again to section 1698, the taxpayer provide normal books for accounts, provides the bills, provide receipts, invoices, and cash register ledgers, and they even provide the schedule in the tax return, as we mentioned it in page 149 and page 201. And this record, it should indicate the taxpayer follow the code 1698, and should the court please use the sales ledgers, and if they need any more documents, we can provide it to the court to rely on that sales ledgers. And please waive any and all penalties at this time. Thank you for everyone.
Thank you. Before I move on to final questions, I'll just ask if CDTFA has anything that it wants to add in response to appellant's rebuttal.
No, Judge.
Okay, thank you. Then I will ask my co-panelists if they have any final questions. Judge Kim?
No final questions. Thank you.
Okay, and Judge Wong, anything further?
Nothing further. Thank you.
Okay. Then I would like to say thank you, everyone, for your presentations and for your time today. At this time, the record is closed and the case is submitted today. The judges will meet and decide the case based on the evidence, arguments, and applicable law. And we will mail both parties our written decision no later than 100 days from the date the record closes, which is today. This hearing is now adjourned, and this concludes OTA's hearings for this morning. Hearings will resume this afternoon, I believe, at 1 p.m. Thank you, everyone. We are concluded.
Thank you.
Thank you,
Thank
Judge.
you. Take care. Thank you.
Thank you.